Okay, so welcome everyone to our X Space, sponsored here by Blocksquare. And today, this deep dive is on RWAs and understanding the technology driving adoption. And first of all, I'm your host, moderator, whatever you want to call me. My name is Mark Mariampale. I've got a plethora of experience in RWAs. I'm CEO of Tokenization, a blockchain consultancy, and my background's been in blockchain, Web3, capital markets across all the investment banks. That's enough about me. We're here today, like I said, to dive deep into understanding technology, driving the adoption of RWAs. And we've got a great panel set up today. We've got Denis from Blocksquare, Adam from RWA.io, Effendy, and Sharia as well, also on the panel today. Now, just to give a quick introduction and background, 2025 has been a massive year for real world assets. As most of you know on this call, in the lead up in the last few years, it's been in the talk, the institutions have been talking about it, even retail have been talking about it. But this has really been the year that RWAs have come to the fore from tokenized real estate, which is the main use case, treasuries, credit markets, private companies, and any asset actually that you can tokenize. So we are seeing a surge in adoption and infrastructure innovation. And from my personal experience working in the sector, we are really now seeing institutions coming in. We are actually seeing real buy-side demand, which is one of the biggest issues in the RWAs. And today we're going to focus on that technology layer behind the adoption, how platforms across the globe are bridging CeFi and DeFi, ensuring compliance when we're building real-world assets, and the trust in these assets as well. Some housekeeping as well. So feel free, please, to retweet this. Let's get some support going for this X Space by Blocksquare. In the future, we're planning to do a whole heap more on different topics. So your support will be greatly appreciated. Please follow the speakers, including myself. And we're going to do a Q&A later on if we've got time. So please feel free to drop the questions in the thread, and my team at Blocksquare will ping that to me, and I'll try and make sure we'll get some great Q&As from the audience. If anyone has any follow-up questions or they're interested in finding out about tokenization, but feel free to DM me, Denis, or anyone else on the panel. We'll happily connect you. Okay, now without further ado, we are going to do some speaker introductions. First up will be Denis from Blocksquare. And Denis, if you can give me a brief intro, who you are, what you're working on, how Blocksquare is contributing to the RWA ecosystem. Thank you.
Hi, Mark, and everyone. Thanks for joining the space. Thank you, Mark, for the kind introduction. I'm Denis. I'm the co-founder and CEO of Blocksquare, which is a project we started back in 2017. We built this infrastructure that can easily onboard any real estate asset and make it available on chain throughout the wider DeFi ecosystem. We've so far tokenized something above 200 million worth of real estate assets in different jurisdictions. Yeah, very, very glad to be on this discussion today and joined with other panelists.
Great, thank you, Denis. Much appreciated. Denis from Blocksquare there. Okay, moving on to an old friend, Adam from RWA.io. Adam, please the same.
Hello there. Can you hear me okay?
Yes, you're on there, all the way from Ireland.
All right, perfect. Thanks, Mark. Yeah, it's great to be on with some old friends, new friends as well. So thanks for having me. I'm Adam Bouktila, co-founder at RWA.io. We basically try to map the entire industry. So one of the problems we're trying to solve for is the fragmentation issue. There's fragmentation on the issuer side. So there's projects springing up all over the world in different jurisdictions. I think you rightly said it, Mark. The space has been exploding. There's now more than $40–50 billion worth of tokenized assets that are out there, a variety of different asset classes. But the question still kind of remains, how do we find them? And how do these asset issuers basically tap into on-chain liquidity? So we said we'd start with the data first. So we're mapping over 400 different projects, $300 billion in total worth of assets. And yeah, I'm delighted to say some of you are on the platform already. For those that aren't, please come. It's completely free to come on there. We basically offer a shop front for all tokenized assets. And we've been growing kind of steadily. I'm also co-founder at DeFactor. We've issued over $100 million worth of tokenized assets, a variety of different asset classes. And I'm delighted to be here.
Thank you, Adam, all the way from Ireland. Much appreciated. Next up for the intro is Effendy from CABAR. Effendy, really excited to hear about you, and I don't want to spoil your intro, but especially how AI kind of fits into this as well.
Okay, hi everyone. I'm Effendy Zulkifly. You can call me Andy. I'm the founder of CABAR, Center for AI, Blockchain and Advanced Research. We are actually registered as tech non-profit NGO, where my work sits at the intersection of AI, blockchain, law, and public policy across Asia. And I spend most of my time looking at how emerging markets can adopt advanced technologies without losing fairness, inclusion, or digital sovereignty. So I'm also wrote a book called Artificial Intelligence, Law and Ethics, The Balance of Power, which looks at how AI systems reshape governance and the ethical AI. We need as a nation transition into more automated economies. And so I'm here tonight wearing two hats, as someone building in the ecosystem and as someone thinking deeply about how RWA tokenization, legal frameworks, and AI governance should evolve together. Excited to join this panel and dive into what's working, what's breaking, and what still needs to be invented. That's all for me.
Well, great. I know I can call you Andy. That's a great little short version for your name. Great to make a new friend on here. Thank you very much for that intro. Very exciting, especially on the AI side as well. Over to an old friend, Shreya, from Integra Foundation. Shreya, the same, please, an intro on what you guys are up to.
I think Shreya might be having some technical difficulties. Let's see.
Yes, I think she may. So whilst we wait for her to join, especially for the panel, I'll give a brief intro for Shreya. I'll do my best. So hopefully the Integra Foundation don't shoot me down. Hopefully I'll make it for the next Blocksquare spaces. But Integra Foundation, they're launching an L1 EVM, essentially based on real estate. That is their focus. Obviously, one of the bigger kind of use cases in RWAs. And they are looking to focus on building a chain that really hones in on the biggest use case for RWAs. So keep it efficient, keep it really strong with bringing sell side and buy side. And with that focus, they believe over many months, many years, when they launch, they'll be able to really build a strong foundation for high net worths, family offices, and even retail to join. But feel free to please go check their website. I may have not done the intro justice, but hopefully Shreya will give you the thumbs up for that intro. Okay, so that is the intros all done. So for the rest of this X space, we're going to have a discussion where each of the speakers will go through a question that they asked. And like I said, please push any questions into Twitter, and the team will pick it up and it will make its way to me. And hopefully we'll have time to answer this question. So I love questions from the audience. So look, please feel shy. Nothing is a silly question. We're all here as friends and family, all here to learn, all here to push on in the RWA space. So please get typing, pop in those questions. Last thing from me before we get into the Main discussion. Big thanks to Denis and Julia for Blockface for bringing me on as host, moderator, whatever you want to call me. It is a privilege to serve the community here for Blocksquare. I've got my other kind of day jobs as business development at Valerium, but I really enjoy doing these X Spaces types of things. All right, so we're going to crack on. And first up, question to Denis from Blocksquare. When tokenizing real estate, how can builders strike the right balance between compliance and innovation, especially when translating CeFi structures like SPVs and custodians into DeFi models built on smart contracts? I'm going to start again. As you can see, that was live. Tried to block it, all the calls coming in, but unfortunately that came in. I'm going to restart the question, Denis. When tokenizing real estate, how can builders strike the right balance between compliance and innovation, especially when translating CeFi structures like SPVs and custodians into DeFi models built on smart contracts to ensure consumer protection whilst keeping transactions orderless and efficient?
Well, that's a tough question, I guess. It's $1 million question. I think honestly, it depends on the asset, obviously, that you're tokenizing. At Blocksquare, we've been really focused on the real estate use case, and when it comes to the real estate use case as such, I think it's very important to understand, why structuring an asset in a certain way, how to tie it really to on-chain settlement, because that's what it comes to. The crypto DeFi world is used to, when you buy a Bitcoin, you own a Bitcoin, right? That's the general premise. And in this way, in a similar way, it's how RWA, when tokenized, needs to function. When I buy a token, I need to directly, the rights that I receive from that purchase need to settle directly onto me as the new owner. And that many times doesn't really happen. A lot of times you have this tokenized layer that sits on top of an equity layer that sits in a traditional structure, and it doesn't really settle when you purchase tokens, but there needs to be certain actions performed that give you the right to settle into equity, but they don't by default. And I think that's perfectly fine. But one of the things when you're structuring a real estate deal, for instance, is that you want to achieve this on-chain atomic settlement. And it means that you need to have a way of legally transferring the rights that the actual land title owner has over the asset, or a portion or a section of those rights. In our case, what we do is we transfer economic rights on-chain. And then these economic rights settle between investors when they purchase and sell these tokens on chain. And I think that's very, that's an important way of structuring things. What does this mean as well is that the tokens that are outputted might not in general be regarded as securities even. Because you're not tokenizing existing traditional securities, but you're creating tokens that might be categorized as securities depending on local or the jurisdiction where they're issued from. In the US, for instance, anything you tokenize is a security because of the Howey test. But in Europe, that's not generally the case, and it might not fall under Europeans' regulation for securities, so financial instruments, which is MiFID II, but you might structure the token, even when tokenizing a real estate asset, to be to fall under the MiCA regulation, which is the crypto assets regulation that's in place. And the way we structure the tokenization actually categorizes these tokens as other crypto assets under MiCA. And that's very interesting. The interesting part is that these tokens can actually live in DeFi protocols. They can interact with DeFi protocols because they're not tokenized securities, as mentioned, and they don't have the same restrictions as that apply to tokenized securities don't apply to these tokens. So there's a lot of let's say gray area that comes with it, and it leaves a lot of possibilities for further developments and exploration of what can be done when you bring real estate assets in tokenized form into DeFi. So there's a lot of possibilities that are still open, which means there's a lot of room for innovation. And that's why we chose that path, or we wanted to push to get to a legal framework that offers investors the same levels of protection as in centralized deals or in traditional markets, of however you CeFi or however you call it. But at the same time, it categorizes the tokens in a certain way that can really, really push innovation forward. And I think that's a important distinction that a lot of times is overlooked when you are comparing RWA tokenization protocols in general.
Wow, Denis, let me give you a gold star for that. That was a very thorough answer to the question. I was hoping I'll get you stuck on there, but great points there. And I think just going back to your point on title deeds, I've had plenty of conversation with Julia on this. In Dubai, they kind of push in the forefront of tokenizing property deeds, title deeds, and we've seen great demand, by our peers in the industry. I think, a couple of villas and estates selling out in seconds from retail, across maybe 100 different nationalities that are entitled to purchase in the UAE. So I think, just going back to what you're saying in terms of what needs to be done for this to become a reality, I think like I said, we're starting to see it actually, and it's going to be quite exciting, right, over the next couple of years, especially with Blocksquare focused on real estate. Great. Okay, so on to the next question. Andy, as you said, I can call you. Now, over to you. So, question is, as nations adopt AI and blockchain strategies, what ethical and legal guardrails should be embedded into RWA tokenization frameworks to ensure inclusion, fairness, digital sovereignty, especially across emerging markets?
Okay, thank you. Thank you, Mark. It's a very good question. I'm now based actually in Jakarta, and every 2 months I also will we are expanding to Riyadh, Saudi Arabia. But before we go deeper, let's align on what RWA actually means. From my perspective, and we need to have a sync between us on the mutual understanding about RWA, right? So when we talk about real world assets in this context, we are talking about taking physical or traditional financial assets like property, gold, suku, this is Islamic bond, invoices, carbon credits, even agriculture yields, and representing them on chain as digital tokens. So it's not just about crypto speculation. It's about turning real assets into programmable, tradable, and fractionable units, so they can move faster, cheaper, and across borders with built-in compliance. So this set the frame the RWA. That RWA equal to infrastructure, not just hype. So when I want to share how RWA is moving from hype to real economic wheels. So once you view RWA as infrastructure to modernize how assets are issued, traded, financed, and audited, the conversation changes. We are not talking about upgrading the plumbing of real economies. So I would like to talk more on opportunities in Malaysia, Indonesia, and Saudi Arabia. In my country, Malaysia is positioned for institutional grade tokenization, Islamic finance, suku, gold, wakaf assets, halal supply chains. These assets are already there, and the frameworks are very strong. So what's missing is efficient digital rails. In Indonesia, it's more on the scalability story. Indonesia have huge SME base, fragmented registries, and millions of informal assets waiting to be digitized. Whoever builds on an RWA framework that works at micro level scale, and we could unlock this $1 trillion liquidity. While I'm now already expanded to Saudi Arabia. Saudi is where RWA becomes part of the state infrastructure. So they have a vision 2030 is digitizing land, logistics, carbon markets, and industrial asset. So with government buy-in, I believe that tokenization can be deployed at national scales. So when we talk about on the legal issue, it's quite for me it's quite challenging because RWA frameworks need algorithm transparency. So especially where AI models are used for asset pricing, risk scoring, or compliance automation. So we cannot allow black box AI to determine who gets access to capital or how collateral is value. So most Asian and global South jurisdictions still operate under analog era regulation. So when we introduce tokenized land titles, gold, suku, or supply chain asset, for example, we need dual recognition across both legal and digital registries. For example, when we want to create statutory definitions for tokenized RWAs, so courts, auditors, and regulators can enforce right. Implement tired KYC or AML model suitable for unbanked or thin file population. We need require independent audit trails for custody, reserve, and Oracle data sources so the legal status of a token remains verifiable. So without this, Mark, the risk is regulatory arbitrage, fragmented compliance, or overdependence on foreign legal standards. So when we talk about adoption, right, countries adopting AI and blockchain must ensure that they are not outsourcing their sovereignty to external compute, external data governance, or external validators. So one more thing is very important to all of you that we need to understand about critical data used in RWA tokenization. You know, land registries, mineral reserves, agriculture yields, credit scoring should be processed and stored under national jurisdiction. So this is very important that we need to understand. So because I'm from Asian, for Asian and other emerging regions, RWA tokenization can be agreed equalizer, but only if the frameworks protect fairness, accessibility, and national autonomy from day one. If we get the ethics, the law, and the AI governance right, we can unlock liquidity for millions without sacrificing sovereignty or stability. So this thing that I think we need to take care and we need to understand very well. Over to you back, Mark.
Andy, that's great. Really exciting, especially what you're kind of doing in the AI space. And I feel like jumping on a plane to Kuala Lumpur, catching up more, I'm sure, like the rest of the audience. But yeah, really exciting. Be a pleasure to find out more.
Yes, Mark, because most of the countries I involved, especially Indonesia, because my mom from Indonesia, actually I'm quite mixed from Indonesia and Malaysia, because the third world countries, they have still a lot of what they call infrastructure to be built, right? So a lot of land, you know, in fact, when we talk about Islamic bonds, a lot of opportunities. And I will talk later on about the opportunities on RWA in these type of countries. And now I already expanded to Saudi Arabia. And I will talk more after this on the opportunity that what we can do as people in this industry, especially on RWA, what we can do in these countries. Thank you.
Definitely. Yeah, no, definitely. Just to close off there on that point, Andy, I think we'll see a lot in developing countries, like you mentioned, Indonesia and Malaysia. I think blockchain in general and AI as well is a level playing field. to compete with other kind of G20 jurisdictions around the world. So it's great to see innovation. It's great to see advancement from a lot of developing countries around the world. So stay tuned and look forward to seeing how that progresses. Okay, next up is Adam from RWA.io. So question to Adam is, what mechanisms will be best sustainable? What mechanisms will best enable sustainable on-chain liquidity and distribution for real-world assets, from token issuance, primary to secondary markets? And how can we balance transparency, price discovery, and risk management within DeFi?
All right, a nice easy question. There's some seriously meaty questions on this panel, which is great, and it kind of shows that the space is maturing a lot more. We are asking the real questions, and it has been touched on a little bit by my two other panelists. So sorry if I repeat some of it, but there's a big misconception that exists in the tokenization space or the RWA space, and that misconception is basically, if you bring an asset on chain, you're magically going to get access to liquidity. It doesn't work that way. It still has to be a good product. It still has to be structured in a way that's appealing to the investors. And from the infrastructure and the technology side, it has to be robust. It has to be trustworthy. So good products can attract liquidity. There was a time, maybe if we spoke 3 years ago or 5 years ago, I would have said, look, it still needs to show up, but the numbers are there. There are billions of dollars of RWAs being traded. The issue is that the vast majority of those are still on the primary issuance, right? It's still just that primary market, and we haven't unlocked that secondary market trading yet. But I think it's slowly but surely getting that way. And just to give a little bit of context, I spoke last week. I was in London at the Tokenized London event. It's obviously one of the biggest financial markets in the world. Spoke to most of the major banks that were there. I gave a talk. There was maybe 80 to 100 people in the audience. And I asked the question, how many of you know about RWAs? Obviously, every hand in the room went up, which was great. Then I asked, how many of you actually hold RWAs? And there were 2 people that put up their hands, and one of them was our lead developer. So it just shows you we're still very, very early in the space, especially as it relates to retail access, right? You're seeing the majority of issuance is now still going towards institutions, and that's great. That's where the money is, with a lot of the high net worth individuals, institutions, hedge funds, etc. But the problem here is these institutions can already get access to many different sources of yield. They can already get access to many different types of structured products. So I'll say it again, unless the product that you're issuing is actually noteworthy or it stands out, it doesn't mean that it's magically going to sell. And there's 3 things you have to look at when you're structuring this product. First, of course, is the yield. So what are you offering? It has to be competitive, and it has to be competitive enough so that these institutions will risk, bridging capital on chain. Maybe it's something they're not comfortable with. Maybe it's something they're going to have to convince their board to make it happen. So it has to be compelling. The second piece is around the lockups. The majority of RWA issuances, or a lot of them, they will come with long lockups where you'll have to lock up your capital for at least 12 months or 2 years. There's very few of them that are liquid from day one. And in the crypto world, in the blockchain world, it ages in dog years, right? So if you ask somebody to lock up their cash for 3 years, it's going to feel like 20 years. So try to make sure that you can have some utility on that token such that maybe you can draw down the yield and that's liquid from day one. Maybe you can use it as collateral in DeFi lending markets and really give a reason and embellish, the reasons why you would bring an asset on chain. So as I said, it's a very good question. It's a meaty question because the answers of what needs to exist in order to basically build sustainable on-chain liquidity. Well, one of the key things has to be interoperability. I touched on it a little bit with my intro, basically saying there's a fragmentation problem, and that's fragmentation of the assets that are being issued on various different L1s and L2s, but also the liquidity being siloed in different chains, or liquidity on basically on one chain, not another. We need to have data standards, API standards, integration standards, so that the traditional finance world can actually bridge onto this new world. And it was said very well just before me, it's basically building out that new rails, but it has to be integrated with the existing systems. And I know from previous experience, when you go inside of a bank, they're running many different types of IT infrastructure, and a lot of it is very old. A lot of it's running and hanging by a thread. So if we come and try to bring, instant settlement, 24-hour trading, a lot of the times the infrastructure can't actually manage that. So I think it's important to manage expectations, what needs to happen for this to be sustainable. I think Andy touched on it very well. We're going to have the ethical, legal structures, regulatory in place. I think the gentleman from Blocksquare, Denis, if I'm not mistaken, said it really well too, about structuring these products in a way that it can be issued on DeFi platforms to give people access, because this is not a technology problem anymore. It's now not a regulation problem, it's an access problem. And the sooner we can give access of these assets to as many people as possible, I think you're going to see that liquidity slowly but surely rise. So apologies, I feel like I've ranted a little bit there, but these are some of my takes on the liquidity side. I think it's slowly but surely increasing. You can see that by the numbers on RWA.io and other data platforms, but we're still very early in the game.
Well, thank you, Adam. And, me and Adam on plenty of other panels and discussions. And whenever he says the word collateralization, it's dangerous, because I know I'm here to keep this to 45 minutes, but Adam, I can't let you get away after saying collateralization, and Denis touched on liquidity as well, that we think it's one of the biggest plays also for RWAs. Once we can get liquid RWAs coming in, the infrastructure is there to do collateralization. It's already built, and we will really see assets such as RWAs balloon as adoption comes in, when institutions realize that they can do collateralization. In an investment banking world, if some of you are aware of, these are called repo transactions, and it's what institutions are used to. So yeah, as soon as we get a nice sturdy real estate paying out 10%, institutions will love to come in and do what they do with stocks and shares. So thanks, Adam. Yeah. Thanks for making me talk about collateralization again. I love it.
No problem.
Okay, so just moving on to Shrey from Integra. I know she had technical issues. So Shrey, can you hear me? I'm just going to ask you a question, and if not, I've got your answer. You just typed it in for me, so I'll read it out on your behalf. No, sorry, you're not going to hear Shrey's voice today. It's got to be mine. So the question to Shrey is, how can standardized asset data models and on-chain compliance frameworks create true interoperability between tokenized real estate ecosystems, similar to how standardized APIs transform Web2 finance? So yeah, it was briefly touched on before, but here's Shrey's answer. Interoperability in Web2 only became real once banks and fintechs adopted standard data models and APIs. Tokenized real estate is at the same inflection point. Every platform today uses its own formats, its own compliance logic, and its own attestation stack. That fragmentation kills liquidity because markets can't speak the same language. Now, standardization fixes this in 3 ways. First, mechanical asset identity. With something like Integra's chain-agnostic asset passport, every property carries a unified variable record. Provenance, ownership, valuations, compliance docs are tested by KYB verified experts. One asset, one source of truth across change. So that's an example of cross-chain, how that can be implemented. Secondly, machine-readable compliance. When rules are encoded as standardized modules, any marketplace or ATS can instantly check eligibility without rebuilding due diligence from scratch. And then thirdly, shared liquidity rails. Once assets follow the same schema, a global order book can route bids and trades across ecosystems just as easily as APIs did for payments in Web 2. The result is simple. When assets and compliance are standardized, liquidity becomes chain agnostic and global. That's the shift that turns tokenization pilots into real institutional market. And I think Sherelle hopefully will give me a thumbs up for reading that out. So apologies, we weren't able to have Sherelle speaking that out, but hopefully that's a good answer for everyone. Now, unfortunately, Matt Cook from Mandela Chain was meant to join us today, but unfortunately, last minute had an emergency and can't attend. So I'm going to put this out to the panel. Feel free to jump in, whoever, to answer this one or a number of you. But the question that Matt was going to take, and it's out to the panel, is what role can national or enterprise-grade blockchains play in integrating assets with public infrastructure? So anyone out there?
I am not sure if this is just me, but Mark, you broke up when you asked the question.
Yeah, same for me.
I heard
it must be Mark.
enterprise. I heard enterprise, and that was about it.
Okay, go for it. What role can national or enterprise-grade blockchains play in integrating tokenized assets with public infrastructure?
I think it's been touched on a little bit, if I'll just speak briefly, but just it's that integration layer. It doesn't really matter what blockchain it should be on. I've kind of, when I got into the space in 2017, it was always the first word on everyone's deck, blockchain. This is the blockchain I'm going to use. The tech needs to be abstracted away. We need to know that the integration points exist from these large enterprise systems. So if you think about things like SAP, Oracle, 80 to 90% of the world's assets touch these systems. So to think that enterprises will go and use public blockchains with new technology that's been built, no, they'll want to integrate from their existing systems. So I think there is certainly a role to be played by these permissioned kind of enterprise grade blockchains for InfoSec and for all of the different reasons you would have it. But ultimately, it will only succeed if there's interoperability, if there's instant settlement, and basically if we can solve fragmentation. So I hope that answers the question. I caught most of it, I think.
Yes, no, definitely. Andy, I think you were going to say something. No?
Can you repeat, because it's got from my side it's breaking.
No, I think it was my connection at the time. But what role can national or enterprise grade blockchains play in integrating tokenized assets with public infrastructure?
Hello.
Hi.
Hi. Oh yeah. Sorry.
I'll repeat again.
Please repeat again. Yeah.
Okay.
Sorry, just now. I'm not sure from my side or from your side. Again, you're talking about enterprise blockchain, right?
What role?
I heard that.
Yeah.
But the last points, yeah.
Yeah. What role can national or enterprise grade blockchains play in integrating tokenized assets with public infrastructure?
Oh, all right. Okay. So when we talk about the role of the on the enterprise blockchain, let me frame RWA in a simple way. So we are all aligned. So basically, RWA is basically the migration of real economic value onto programmable rails. And the reason it's exploding is because the numbers are finally backing the narrative. For example, Deloitte projects over USD 60 trillion worth of assets will be tokenized by 2030, and BCG estimates that 10% of global GDP may eventually sit on chain. So when across all these kind of the these markets, enterprise blockchain from my perspective understanding becomes the backbone. So it gives regulators on audit trails, gives institutions compliance, and give investors trust. So I always will see from this angle perspective, because I am pro-regulator, right? I'm not the guy, because not young anymore. When we talk about enterprise blockchains, I will focusing on regulatory frameworks and how we can combine enterprise grade ledgers with AI driven valuation and real time verification. So by that, you can get asset rails that are finally credible enough for banks, funds, and governments. So the story isn't crypto hype, is about rebuilding the plumbing of real economies using tokenization, AI, and enterprise blockchain. And these three regions, especially in Malaysia, Saudi, are the perfect moment to lead. For example, I give more use cases. Now, when we zoom into Malaysia, Indonesia, and Saudi, the opportunity becomes very real. In Malaysia, for example, we've got a USD 2 trillion Islamic finance sector, a regulated gold ecosystem, and fragmented supply chains that are perfect for tokenization. So the gap is efficiency, not assets. And I believe 200% RWA solve that. Indonesia is a scale story. 60 million SMEs, most thin file, most underfunded. McKinsey reports as USD 165 billion annual SME credit gap. Tokenizing receivables, inventory, land use rights, that's where liquidity gets unlocked fast. And the last country that I informed, I'm very excited on this country, Saudi Arabia. Saudi is a transformation story. The latest GDP data shows that this kingdom growing beyond oil, with non-oil activities now forming nearly 50% of total GDP. So they have their own Vision 2030. They are digitizing logistics, tourism, real estate, carbon markets. So these are perfect high-value RWA candidates, especially when backed by sovereign cloud and national AI strategies. So this will be a very important as enterprise blockchain becomes the backbone. And hopefully I answer your question, Mark, on this matter, right?
Really
Yeah,
appreciate
I always will give from the perspective on the opportunities, right? Because for me, that is about money and cents, and how about we can do adoption, right? It's no more hype anymore. It's not more just for hype, just for profit, just for speculation. It's a real project now because it's asset backed. It's very powerful platform. We are in a very powerful industry. Over to you back, Ratma.
Thank you, Andy. And we're coming close to the hour, and I'm trying to keep to it. So there is one audience question that came in that I just want to make sure we quickly touch on, and healing it up now. So it came from Peter at Valerian PLC. Where do you see RWAs evolving in the next 2 to 3 years? I'll kick it off, and any of the panel, feel free to jump in and give your thoughts. So I think, as the panel mentioned and I earlier on, I think we're at that inflection point where RWAs will go towards mass adoption. The technology that we discussed today, will really drive that as the institutions, retail coming in. I think the key thing here is the big use cases will take to fore, like real estate. Obviously, what Blocksquare are doing and a number of the other outfits. Technology, again, from RWA.io is very important, as it does the listing, shows how much TVL or RWA chains, does the verification of that. So I think all of this combined over the next 2 to 3 years, we'll see a big uptick in big use cases such as real estate. but I think some of the niche areas as well, such as royalties in sports entertainment, also funding government projects, and even smaller scale real estate where people that are struggling to sell or exit a property, such as developers, will find tokenization as a good route through there. But just over to the panel if they wanted to add anything, because I'm the moderator today, shouldn't be giving my opinions.
I want to be the first to respond on this. Is it okay? Just a quick.
Sure.
It's a very nice, it's a very good question, because at the end we're talking about the future of what actually where RWA is heading. So right now, tokenization is about making asset liquid, but the next phase is about making assets intelligent. So when we talk about this making assets intelligent, Deloitte estimates over USD 60 trillion in global illiquid asset will move on chain by 2030. And again, I will talking back about where the countries that I'm doing a lot of this kind of a project, right? For Malaysia, Indonesia, and Saudi Arabia, the opportunity is huge. Malaysia has deep Islamic finance infrastructure and over RM 900 billion in Sharia compliant assets. So please study about this opportunity, right? Indonesia has 65 million SMEs, and the latest GDP's number shows that they are no longer powered mainly by oil. For Saudi, non-oil growth is rising faster than hydrocarbons. That means that we can tokenize. That means tokenize real estate, tourism zones, carbon credits, and industrial asset fit directly into Vision 2030. So this is heading now for this kind of countries. So what's the future of RWA? For me, it's a world where assets don't just sit on a ledger. They update themselves, self-report their condition through IoT oracles, get priced by transparent AI models, and settle instantly across jurisdiction. So nations that build this early will unlock liquidity, reduce friction, and attract capital, and focus on the global south because they have the most to gain because they hold the asset, but not always the rails. So RWA is how that gap finally closes. That's all for me.
Great.
Over to you back.
Thank you, Andy. Anyone else from the panel?
Perhaps I just wanted to touch upon just the earlier question, but it does have to do a bit with the future.
Yeah.
You know, following crypto since before it was actually cool. And one thing that keeps coming is, you know, enterprise gate blockchains will take over, and whatever is being built throughout crypto is just for playing around, and it's never going to gain any adoption. The market is showing directly the opposite, that it actually doesn't really matter what blockchain. Somebody, I think, Adam said before. And it's just another excuse to maybe, you know, do some additional government spending somewhere. But in the end, you know, everything is converging towards Ethereum as the go-to smart contracts platform. The fact is that Ethereum has been used the longest. It has survived many competitors, and it's still there. And there's many projects that are building on top of the foundations that have been laid by Ethereum. So just disregarding it as the key and crucial and chosen now even piece of infrastructure by most RWA players is not the way we should look at this. I think in the future there's going to be even a higher importance and dependence on Ethereum functioning, and there's going to be a higher let's say level of investment into that infrastructure, because a lot of systems and subsystems are going to depend on it. So I think, however the financial industry has been built in the past with blockchain and tokenization, it just can't continue in the same form as it has. There's going to be dependency on public infrastructure, and public infrastructure, I mean Ethereum, nothing else that is centrally governed, centrally pushed out, because it's never going to gain that adoption, and it's never going to gain that brain power, because you need to understand that evolution in the technology, which is very new, and there's new methodologies, new implementations, new versions coming that are solving real issues like privacy, for instance, will happen only if there is a big collective of brain power being able to process it and implement it. AI is not going to be able to compete against that brain power, not yet. So Ethereum has the biggest developer community, and that's an important distinction versus anything else. And it's going to push it forward to be fastest in implementing solutions that will serve the wider market and the sub elements in infrastructure, but without it, the space will not be able to flourish and continue its growth. So I think 3 years from now, RWA, Ethereum, very big chunk of activity is going to happen there, and there's going to be a couple of other chains on the side, but liquidity is going to be mainly on Ethereum because that's where institutions going to feel the safest.
Wow, great thoughts, Dennis. Thank you so much. And yeah, I think we all feel the same. The TVL, especially on the institution side, is going to be on ETHVM. A lot of the audience agreeing there, big thumbs up. So thank you very much. We're running over time, but I want just to make sure that we do get some closing thoughts from our panelists today. Really, what's next for their project? How do you see RWA landscape evolving in 2026? We kind of covered it off with this question. So feel free to give us a rundown on your project and what's going to kind of happen in 2026. And for the audience, we're going to go through kind of these guys and girls now, but feel free, please, to follow them on Twitter and also on LinkedIn, and you'll get some great insights. So first up, Adam, what's next for RWA.io in 2026?
Yeah, I think some of it's kind of been touched on in terms of what the future holds, but I think what we're looking to do is consistently add more assets, more asset classes. We want to be the front door for the next wave of users that come in. And I think it's kind of foolish to assume that it's going to be either the institutional capital or the very kind of crypto degens that are playing around with DeFi. It could be the regular person, it could be the retail entity, and they need understandable rails, they need UX that works. So we're basically going to consistently build that out. So from the issuer side and the investor side, RWA.io becomes basically a hub for them. So yeah, thanks very much for having me. I think this has been a great chat.
Awesome. Thank you, Adam. Appreciate it. Next up is Shreya. I don't think you're able to speak, but if you can, feel free. If not, I know you've typed something for me to ask. No, we don't. Okay, so from Shreya, we are gearing up for tokenization of our 12 billion AUM on the private blockchain, and Polytrade, our development entity, has just announced that Integra will be giving an allocation to the Polytrade community. Staking of trade goes live today. Wow, on Integra. So big things happening over at Integra, the foundation, and from what I can read here, Polytrade will be the development entity. So watch that space, follow them on socials as well. Andy, over to you. Same question. What's next for your projects?
Yes, very different.
Andy, I'm not sure if it's me, but it can cut out.
Is it for me? Wait, another guy? Maybe.
Yeah, no.
Mark, right?
Yeah, don't worry. Go ahead.
Oh, okay. So I think I will focus more on gold tokenization. Because why? Because in Malaysia, for example, and Saudi, so gold actually will be easier compared to land asset, for example, right? Because they have their own vault where they have a projects that settle already with the audit, right? But of course, for this kind of projects, it's quite challenging whether I will go for public blockchain or for enterprise blockchain. So this is a quite challenge for my team to decide and to suggest, because we work closely with the government agencies, and I always mention to my team. So if our plan focuses on if we can go public with permission, if you want to sell asset to a wide audience for the retail investors, right? But we go enterprise if you are just moving assets internally between bank branches of specific partners. So I will go hybrid, where certain on the project we go for public and certain project we go for the enterprise. But again, when we talk about public blockchain, is a quite issues will be arise, especially from the authorities, right? Because they want to control, they want to validate, they want to monitor closely, especially on the KYC side. So next project for us, please, to all of you that really want to have interest on our project, please explore more on the gold tokenization, because this will be a very good moment, and we can see a lot of investment. Every country inside Saudis, they imported a lot of gold. In fact, I know certain agencies in Malaysia, they don't have enough golds to sell because of the demand is very high, right? And by having gold tokenization, I believe we can expand more in terms of I can say that some sort of the public utilities in the blockchain space, while more solid adoptions in marketplace that involve in this kind of industry. So that's things that I can share from this time being. Thank you, Mark.
Thank you very much. And Denis, finally over to you.
So thanks everyone for coming, for everyone who was part of the panel, everyone who was part of the audience, of course. I hope the discussion was informative to everyone. Thanks, Mark, for doing a great job as our host. From our end, Blocksquare will be focusing on bringing more real estate assets on chain throughout next year. We're wrapping up some really interesting things on the tech side for all our white label marketplace operators, currently counting 18 of them. What else? There's a development that those who follow us has passed smart contract auditing, and so Q1 will be definitely a time where we'll be bringing that on chain. Go to oceanpoint.fi and search for the white paper there, how we are basically solving or trying to solve liquidity for tokenized real estate assets on chain in a DeFi way. And one of the things that will be shifting our focus as a team as well is not just be a white label provider, but as well driving the market with Oceanpoint's marketplace, becoming a hub for people to find really good real estate opportunities, mainly located in Europe, and issued in a MiCA compliant way, but maybe in time as well from our other jurisdictions. So there's a referral affiliate program that's kickstarting soon with the start of this coming year. And it's going to be a really interesting opportunity for those who join. Thank you.
Thanks, Denis. So once again, we're going to close this case out today from Blocksquare, but stay tuned. There's going to be plenty more. And if you like today's content, there's, like I said, plenty more coming in 2026. So thank you to all our speakers and listeners. Next year is shaping up to be probably the year where CeFi and DeFi converge for real world assets. This is really hype, but it's, as we all talked about today's infrastructure happening. To all our listeners, again, thank you, much appreciated. I've been told, I think it's over 300, 400 at one time. So really good attendance. Look, please stay engaged, keep learning about tokenization, how it's reshaping our world of finance and ownership. And I'm pretty sure I'm talking on behalf of the panelists here today, but they will welcome anyone to DM them with questions. I'm open for that. If you want to learn more, if you're in the tokenization space as well, and you're looking to tokenize, that there's a plethora of individuals on the panel today that you can reach out to and understand how that can actually take place. So feel free, don't be afraid to do that. And then from me, thank you very much, wherever you're in the world. Good morning, good afternoon, good evening, or even good night. Thank you from Block Stations. We're out.